Good morning, it's JJ at microefutures.com. Just wanted to show you folks how to look at these markets when we are in a very tight trading range like we are. Our overnight inventory is pretty much, I'd say about 80% short. Most of the volume and the time has been spent underneath the previous day's close. Now what's happened is the market's just leaking lower because there's not a lot of bid support. You can see that the market ran the lowest stops in M period, but it hasn't taken out the stops of the L low of yesterday. The stops are just at the lower stops are at the bottom of every half-hour bar. These are like a half-hour bar, just with more information. So what happens is when the market took out that M low, we had a little bit of a stop run, and the shorts came in and bid the market up right here. The shorts wait at the lower stops like a dog waits for something to fall off a table. When the market drops, they gobble it all up, and as you can see now, the U period has taken T. And when the next period opens here in the next 10 minutes, what you're going to do is you're going to look for a stop run higher. The stops are at the top of every half-hour bar, so U, S, R, and T, P, O. So once all of that selling volume or the supply, right, above 4033, 4032 has exhausted itself, the market will run back up over 4031 and use these stops like it's doing now, and you'd be looking at around 4031, exactly where VWAP is. So this is an accumulation phase of trap supply. These people were long for 6.5 hours above 32, above VWAP. Then the market sold off just because there was no buying at 2 o'clock, 3 o'clock, 4 o'clock in the morning. So it just drifts lower. But the shorts are bid down under here because there's a short position under 4016 half from yesterday. So the shorts are opportunistic, so they're jumping over each other, leapfrogging each other. Every time they see some supply, they jump in and buy. Right? So if you know where the short positions are and you know where the stops are, you know where you can get long a little bit and sell into that strength. If you're a short seller and you were short 34, 32, this is an area where you're going to run out of supply, so that's where you should cover. This is how we trade tactically in this market. This is how you use where the buying is and where the selling is so you can jump in front of it and actually trade and make a living, right? A lot of these markets are going to be choppy a lot of the times going forward. This is how you learn how to trade that chop. You know, for traders who are good at faster trades, what you can do is, this is a 5-minute chart. You can see it was trading 24 to 28. So you're buying 24, selling when it comes back under 28, right? It looks underneath 24 and comes back up, then you take the long. If it can't get up to 28, get out of it. But learning how to trade choppy, slow markets is definitely a tool that you want to have in your trading toolkit. Because I'll tell you something, it's going to be choppy quite a bit. And why leave money on the table, right? Learn how to trade chop, learn how to read where the buying and where the selling is going to be. Now, if you're long between 24 and 28, you got a position here. You should be a seller when it gets close to VWAP because that's what the size wholesalers are going to do. This is how you trade intelligently using actionable information of where the buying and where the selling is. Where is it? You look to where the stops are. Come learn how to trade and make a living and not put a huge amount of money at risk and worry about 30 to 40 point moves. Learn how to make a living in this market. Come join us at microefutures.com. I'm JJ. Have a wonderful trading day. Trade safe out there today, folks, and we'll see you soon. Bye for now.